för det. Hej, jag sitter jag.
Och det finns någon stabilitetsrapport som man kan ta? Eller?
Ja, vet ni vad? De har jag ju tagit... Jag ska
Finns
visa.
det någon här uppe?
Ska jag visa? Ja, precis. De ligger där
Ja, då väntar vi.
i huvudet. Hej, hej.
Anders från Bönder. Ja, tackar.
Hörde ni mig?
Vi hörde det, men det var ett annat problem. Vi löste det.
Då så. Nej, just det. Nu gör jag ju fel. 00.
Thank you. Your conference will now begin. For a menu of available commands, press ** at any time during the conference. You will now be placed into conference.
Hello, this is Cecilia speaking.
med cyber. Jag vet inte, men bankföreningen gjorde ju en. Men då tittade ju Finansinspektionen på det, så det där stämmer inte, det får vi göra. Och fick då sådana tillfälle till det här med data på bankerna som går igenom. För att den har ju, den är ju helt ofta för oss.
Hur många banker är det någonsin?
8 miljoner.
Ännu fler än Sverige.
Och men det är så, det var sådana extrema, tydliga förändringar. Som man såg när en bank valde att förändra på andra hållet. Liksom det var slog. Så att det var, hur man kan ju se. Gå till att se det. Ja, nu börjar.
Ja, precis. Ta det en gång till.
Okay, so most welcome to the Riksbank. I'm Kerstin av Jokknik. I'm Deputy Governor, and I'm here together with Mattias Persson. Mattias is head of our Financial Stability Department, and we have published our Financial Stability Report today. So we are here to explain for you our main conclusions in the report. We have also published a report on STIBOR, and Mattias will also, I will start with the conclusions from the stability report, and Mattias will continue with the conclusions and our recommendations in the STIBOR report. And there will be room for questions afterwards, as usual. So let's start then. Our main conclusion is that banks' resilience is good. And that may sound a little bit odd, as we are, I mean, on the 5th year of a financial crisis, and we have a crisis around us, especially in Europe. But the Swedish banks, they are doing very well, and this slide shows the profits. The red curve is the profits before loan losses, and I mean, our forecast is that they will continue to increase. There's also a curve showing the loan losses, and you can see that they are on low level, and they will probably continue on that low level, even if, I mean, we have a downturn in the economy, and we have to follow, of course, what will come out of that and how it will affect the banks. You have seen this slide before. It's a comparison with the Swedish banks. We have other international banks, and it is core tier 1 level. And the Swedish banks, they have high core tier 1 levels, and you know that we have recommended banks to have 10% core tier 1 levels from 2013 and 12% from 2015. And the banks are they have reached the level on 10% for 2013, all 4 of them. But of course you can calculate the capital in different levels, and we are aware that the Swedish banks, they have a large mortgage portfolio which is have a very low risk weight. So if we instead compare the gross solvency for the Swedish banks compared with the international banks, they are showing much lower levels. So the proposal coming from the supervisory authority, Finansinspektionen, this week is welcomed, and this is an issue that we have discussed with the supervisory authority, that it's important to have a look at the risk weights and make sure that we also increase trust in the Swedish banks and in the Swedish regulation linked to the mortgage loans. But as I mentioned in the beginning, the debt crisis in the euro area constitutes the greatest risk, and we have experienced some calm in the financial markets during the autumn. We can see here it is a differential in relation to the German 10-year government bonds, and it is the 4 problem countries in Europe: Ireland, Italy, Portugal, and Spain. And you can see that this differential was very low before 2007, and it's been on high levels and come down, but we have still quite a lot of stress in the markets. What has calmed the market in the autumn is, proposals coming from the European Commission and from the European Central Bank. We are still awaiting what are the details behind the banking union, for example, and depending on how this will be developed, I think it will affect the market and also the view on the problem countries and how they will be dealt with for the future. We are not immune from risk, so you have also seen that we have raised before that the Swedish banks, they have extensive foreign funding. 50% of foreign funding is in foreign currency, mainly in euro and in US dollar. And this is an issue that we have a discussion with the banks upon, and we have also recommended banks for quite a long time now to improve their liquidity coverage ratio and also the net stable funding ratio, which will help them to be less sensitive to stress when it comes to liquidity. You are also aware that we have raised the issue on the household debt and the household debt in comparison to disposable income. The household debt in Sweden is on a high level compared with many other countries. And from our perspective, we think it's important to have a discussion upon this and make sure that in the long-term perspective, we are acting in a prudent way so this trend is not increasing further on. We have also made a stress test in our stability report. We are usually doing this stress test, and with the stress we have put upon the 4 banks, you can see here that they can cope with much weaker development. We can come back on that in the discussion, but very much depends upon the possibility they have to make profits in the future and in a weaker development, but they can absorb losses to a large extent if the economy goes down or if the European economy affects us much worse than we have expected. We have a large banking system in relation to GDP, and that is something that we have to take into account. And as I said, we are not immune to what's going on around us, and we have the aspect of a rather big wholesale funding outside Sweden. We have the household debt. So we think it's a good thing to continue our recommendations in the report. The recommendations linked to capital, I mentioned in the beginning that we will continue with the recommendation to have for banks to have a core Tier 1 level on 10% 2013 and 12% in 2015. We are recommending banks to reduce the structural liquidity risk and to continue to improve their net stable funding ratio. Maybe you remember that we also had a recommendation on liquidity coverage ratio, but as this is now on the table and the supervisory authority will implement the regulation on this from the 1st of January next year, and the banks are fulfilling the recommendation that we had in place, so we have left that out in this report. So Sweden is a small country, and we are relying a lot on the foreign markets, and in that sense we have for a long time said that it's important that banks are transparent, not least with their liquidity positions, and we have recommended them to publish more information about their liquidity buffers. And you can see here the green dots is a comparison with the former report in May, and banks have made progress here in nearly all the areas, except the area on producing comparable key figures. So here there is room for improvement, and we hope that they will deal with that. And if they don't, I guess we will deal with it, because that's also important to publish comparable information, and it's important for investors and rating agencies. We have one new issue here, and it is about asset encumbrance. Maybe you have heard that this is an issue in many international forums at the moment, that there is an increased focus on asset encumbrance. There is a need to understand better to what extent banks' assets are encumbered. And we think that banks should be more open here and transparent, so that you and we can understand better to what extent assets are encumbered. And here we have one bank, Swedbank. They have already produced figures, and they are transparent in this area. So I think that would be very good if the other banks are also doing more or less the same. So on the recommendations, we continue to encourage to have a sufficient capital to reduce the structural liquidity risk and to improve the public reporting on the liquidity risk and asset encumbrance. Then I will give a floor to Matthias on STIBOR.
Thank you very much. We also published our review of the STIBOR, the Stockholm Interbank Offered Rate, today. And it's a report about 85 pages. At least the Swedish version is 85 pages. I think STIBOR was kind of come up at the time when the Swedish money market started in the mid-80s. At the beginning, market used different rates, the sovereign, the T-bill. However, that didn't really work. So the market themselves needed a reference rate and started to first use the LIBOR, but then established the STIBOR in 1986. And it has, functioned quite well. However, since that, the amount of contracts, mortgages, variable rate mortgages and derivatives have exploded since 1986. Today, it's about 50,000 billion Swedish krona that indirectly or directly is connected to the STIBOR fixing. So we have followed this for some time now. We actually, we follow it during the crisis to understand what happened to the money market, what happened to interbank lending. And now we follow up in 2011. And we went to the banks and said, we need your data. We need to look at all the transactions that you carried out, unsecured. We need to look at all the counterparties, all the interest rates, the swaps, everything that you did. And we did an empirical part in this report. And when we did that, we couldn't find any clear or any sign of manipulation in the STIBOR. Having that said, it's more difficult to actually come to that conclusion when you look at longer maturities, because you have this implicit interest rates in the swaps. However, and that's something that we think needs to be fixed in moving forward. But even in the longer term, it seems like the STIBOR rate has been on the levels that you would expect based on the Euribor and LIBOR. However, we do think that there are improvements that can be done that would strengthen the confidence in the STIBOR reference rate even more. And that has to do with clear responsibility. For today, the contract between the STIBOR banks is non-public. It's very difficult if some bank wants to join. Who should you talk to? Where should you go? Who should you phone? So clear responsibility. Who is responsible for the STIBOR? The governance around STIBOR and all that. And there also needs to be a clear framework for governance and control when it comes to the reference rate. We also think better transparency. That comes in different parts. The contract being public, but also you could have banks to publish various rates. In order to help market to understand whether or not the fixing is on a something like seems like a right level or not. We also think that the tradition that we had in Sweden before the financial crisis, that there were actually transactions on STIBOR, the possibility to do transactions on STIBOR in order to have an incentive structure for the panel banks that participate in the STIBOR is important. There are some other reference rates globally, not many, that actually have real transactions in the reference. We think that's important, and we think that that should be part of the new framework moving forward. There has been discussions among the panel banks, the STIBOR panel banks, for some time. We have participated in those discussions on the later end, and I think we have had a very good communication, and there has been good exchange of views. But from our point of view, we expect the banks to take necessary decisions before Christmas, and we expect a new framework to be in place before Q1 is over next year. And the expectations that we have on the new framework that the banks will put forward, I think will manage all the issues that we have. And there are some other issues. For example, it would be beneficial if there were more banks taking part in the STIBOR reference rate. I think there are more banks in Sweden that actually could participate, and I think it would be good. It would increase the confidence of the STIBOR fixing. So we will follow up on the work that is carried on. We will follow up with an evaluation of the STIBOR end of next year or early 2014. And we will also monitor the developments in the STIBOR market more closely moving forward.
Thank you, Matthias. So now the floor is open for questions. Pernilla, would you like to say something, or no?
I'd like to say to the audience here that they also propose questions.
Yes.
From abroad.
So for all of you who are with us online, please raise your voice, and we will try to answer your questions. But I have first one question here in the room, so please.
Yes, hi, thanks. It's Andreas Håkansson from Exane BNP Paribas. I note in your first half stability report, in the recommendations you wrote that the Riksbank therefore considers that the major banks need to hold more loss-absorbing capital in the future. That sentence is not in this one. Does that mean that you no longer believe that these banks need to build more capital? And related to that question, when I look at the level of, for example, Handelsbanken and Swedbank, I think on your numbers they are around 16%. Would you consider them to be overcapitalized? And if not, do you consider the banks that are at below 11 to be undercapitalized?
Yeah, on the first one, I don't really know which figure or what the text. We can take that afterwards. You reference it. When it comes to is Swedish banks overcapitalized or not, I think it's too early to say. I think the Swedish FSA put forward this paper on how to increase risk weights on mortgages. That will have impact on capital. They also put forward a figure. That will now be out for consultation for some time. We need to reflect on that. I'm sure others will reflect on that. And, then we will see what that means for capital. But there is also a discussion going on globally on risk-weighted assets. So I would rather think that for Swedish banks in the current market situation, I think it would be very prudent to take it slow. There is still a lot of uncertainty in Europe. Take it slow. Let's see when we get some clarity what will happen to Europe, and the risk that carries. Swedish banks are reliant on wholesale funding, so I think more capital today means cheaper funding, but also some, a more prudent way of moving forward.
Can I ask related to that? You show that Sweden has a very high, if you take banking assets to GDP, it's very high in Sweden. I guess the main reason is that Nordea is a Swedish bank. Given that you see higher risks outside Sweden, does that mean that you believe that Nordea should fulfill the Swedish rules, or do you think that they could fulfill Swedish rules in Sweden and lower rules in other countries?
I mean, Nordea is a Nordic group, but they have their head office here, and they have to follow Swedish rules on a group level. So, I mean, on a group level, they follow the Swedish rules. But then, of course, when they have subsidiaries in other countries like Denmark and Norway, they also have to fulfill their requirements in those countries.
But you don't see that they could be below 12%?
No. So, please.
Just Martial de Crisis. Following up on Andreas' question on the capital ratios, and you're saying that they should take it pretty slowly going forward. That will obviously mean that they'll build more capital, and obviously that has a cost attached to it. Do you agree that they should be able to pass that cost on to customers also going forward, or is that something that the banks themselves should absorb?
I think that's also a good question. I think we're not saying that banks need capital to be sky is the limit, but I think there are a lot of risks out there. We are we are putting forward that Europe is a risk for us. We have big reliance on wholesale funding. Whether or not they should pass on higher costs to customers, I think is something that for the banks to decide. But I think there is also a discussion about what will happen to return on equity as banks becomes safer. So more capital means safer banks. I think even the Swedish banks would agree, I hope, today, when we argue that if you increase your capital, it will be cheaper for your funding. Today we see that clearly. So whether or not higher capital is only a cost or the benefit, I'm not sure. But there is both of that. And I think that's something that we need to consider moving forward.
Just follow up.
Yeah.
You had this evaluation of optimal capital ratios a few months ago, saying that optimal interval could be anywhere between 10 and 17%. On Basel II terms, we already have two banks above the 17% level, which would mean that actually holding too much capital for it to be optimal. Do you agree with that?
Yeah, we had, I think it was a year and a half ago, we did that analysis. But that's right. We came up with an interval 10 to 17%. But there were even, going into details, there were even examples where it could be even higher capital. But we ended up in a interval. Then I think that's a fair question. But I think we also need to consider, okay, what are the risks? What are special for Sweden? So Sweden, we're a small open economy. We have large banks compared to GDP, and we have a big reliance on wholesale funding. So wholesale funding and capital is connected. Again, I think it's up to management to decide what's the optimal mix. But for us, we care about financial stability. I think capital is good.
And as long as we are in this uncertainty with the Eurozone, I mean, there are still quite many steps that has to be taken before we can see that the stress in the markets will come down. We have a downturn in the economy, which is also to be assessed. It's in Sweden, but we have also, problems in Denmark, for example. So there are quite many issues that we have to take into account when we are discussing capital levels with banks. But in this situation, I would say that we would be quite hesitant that if banks lower their capital levels. So now, yes, please.
In your stress test, you have two banks that end up with the capital ratio in 2015 below 12%. What would you think should happen, or what is the plan about what to do with those banks if they don't meet capital ratio then?
Yeah. So we have argued that banks should have 12% 2015. And when we do, you're right, when we do the stress tests, there are two banks that are below that. First, I think we don't really know exactly how that will be formulated. But I think we need capital, and you should also be able to use your capital. But on top of that, hopefully on 2015, which we haven't used in the stress test, we hopefully also have a counter-cyclical buffer, for example. So how that will impact on the stress test and the capital level, I don't know. Should you release that if that's in place or not? So there are some issues when we come into the tail where the regulation is uncertain, and I agree that's not good, but we live under the same uncertainty as you on that.
So shall we see if someone is on the line who would like to raise a question? Someone there? No? More questions from the table here? Yes, please.
About asset encumbrance, you start to pressure on more disclosure. What do you feel would be a level that would make you feel uncomfortable? We have now, I think, from your disclosure, about 34% for the four banks together. What would be the range that is acceptable?
Yeah. I don't think there is, to make it clear, we don't have a level when it comes to asset encumbrance. We have high encumbrance in Sweden, we know why, and the reason is that the Swedish banks have a huge mortgage portfolio and cover bonds. So our worry is for Sweden is not the level. It's more changes in encumbrance. It is also to make sure, that the banks are transparent to investors, to market participants, to analysts, what kind of encumbrance is it. I think in general, transparency on cover bonds is, tremendously higher than if you compare that to repo derivatives and that kind of encumbrance that you get from that. So we can understand the Swedish high level of encumbrance. Then we think it would be good for Swedish banks to actually communicate what kind of encumbrance they have. So for us, it's not the level that we are worried about. We want to make sure that they can communicate to market that the encumbrance that we have is of this sort. It's not repo. There is some repo, but it's not the big chunk. And we also have derivatives. But again, it's not the same high encumbrance coming from derivative or potentially coming from derivatives than some other banks, international banks might have.
Yes, please.
This is Robert Matlin from Swedbank. I have a question relating to the net stable funding ratio and the level of non-domestic wholesale funding or international funding. You encourage the banks to have longer duration funding, have a net stable funding ratio above 100%. But it's also the case that it's not very easy for the banks to meet the net stable funding ratio with domestic funding. The Swedish market is up to 5 years, and on maturities above 5 years, it's very underdeveloped. So if Swedish banks want to meet the net stable funding requirements, they need to do benchmark bonds in euros and dollars, and we've also seen sterling issues and even Australian dollar issues. So is it necessarily such a bad thing that Swedish bank raise long maturity funding in euros and dollars?
No, it's not only bad, but it's not only good. I think when it comes to a long-term funding in Swedish krona, I think there are potentially, funding that should be available from life insurance, from insurance sector. That also, when Solvency II coming in, they also need to match their asset and liabilities better. My view is it's a pricing issue.
And they could also raise more in Swedish krona.
Yeah, that's
so
true.
I mean that is also a possibility.
So the net stable funding ratio would be lower if you raise it in krona than in.
No, I think my point at least was that our point was that you can increase the NSFR by, if you, for example, negotiate with life insurance or insurance. So you could actually, tailor-made or have much longer funding directly. Because the insurance sector needs it to balance their assets and liabilities, and the banks need it. So what doesn't that happen? Because the market hasn't cleared yet. Life insurance and banks have not agreed, what will the price be for that funding. I think that will happen because both of them, could benefit from that. So I think this is a process where we will see some, market will clear someday. And hopefully, if I'm right, but I'm not, sorry I am, but at least there is potential for that.
Okay, well, a follow-up on that. So obviously then Swedish banks should raise their funding costs to match the requirements of Swedish investors, but that falls back onto the question of who should pay that. Should the customers pay that? Should the banks pay that? Should the shareholders pay that? And you say, well, they should be happy that the banks are less risky, but it's also very true that the new regulation passes on more risks to shareholders because they can't rely on being bailed out. So even if the absolute level of riskiness in the banking sector decreases, the level of risk that shareholders can expect to assume is higher. So why should they help Swedish banks with risk capital if they can't expect a decent return? So there's this constant conflict of interest and balance. You have more than one stakeholder.
Yeah. But I also think, you could, if before 2008, liquidity risk was not priced, one could argue at least. Today, clearly, banks and investors need to price liquidity risk. So if that means if you lengthen maturity of your funding, in order to decrease liquidity risk, somehow you need to pay for that. It might be part, to your customers or your borrowers. And how that should be, split between owners and borrowers or customers, I think it's something for management. But clearly, if you lower risks, at least all finance I've been taught at university, lower risk, lower return.
Okay. Just one more question. So of course, a lot of discussion on mortgage margins in Sweden. And if I try to remember what you wrote in your stability reports back in 2006 and 2007, you're discussing risk premiums on the market, that they were too low, investors were not getting enough, or not requiring enough for different kind of risks. And now you have a political pressure on mortgage margins to fall, while you are putting this forward as one of the major risks in the Swedish financial sector. Do you feel that it's a good idea for financial stability if mortgage margins fall?
If house prices fall or
mortgage margins, the bank's margins fall. Is that something that you would prefer from a financial stability point of view?
No, I think we do analysis of the margins in each report. We have done that for some time. I think if there are risks that have not been priced, somehow you need to take into account that. So that needs to be in the margin. I think for us, we don't have a strong view on that. Exactly what should the margin be. But again, it comes back to there needs to be some sharing of costs and benefit. So I'm not sure that the margin should decrease. It's not obvious, but it's not rather. Or on the other side, it's not obvious why if the margin should increase by 10%. Why? Now I can understand, and there is some more. At least there is more transparency on the margin, and I think that could probably increase even more from the banks. But it is difficult. We estimate it, in a way, at least where we have some agreement between the banks, but it's difficult. And if all the risks have not been priced before, it needs to be included today, also to customers.
Could I follow up on that then? Wouldn't actually higher margins from the banks be a major positive for you? Because that's like a tailor-made rate increase where you see the biggest risk, i.e. that households becoming too leveraged, at the same time as the profit margin increases for the banks and they build that for more capital. It would be ideal, I would say.
Yeah.
But I hope there's competition in the market. At least we have seen that the last 1.5 years when there's been competition on market share in the mortgage market. So I don't think, at least if they don't collude, I think it's difficult. And I don't think they do that. There is competition. You can see market shares actually, some of them have improved on the market share recently, and so there is competition.
So let's see, are there more questions? Someone on the other side? On the line? No?
Kopplar vi in dem?
Yeah, maybe they are.
Well, another question from me then. I seem to be focused on funding and liquidity. We have seen increased transparency on the liquidity coverage ratio. But from my point of view, it seems problematic that the LCR requirement is met by such a great extent by placing the money with the ECB and the Fed. And Swedish banks don't have, purely domestic banks don't have the same access to the Swedish Riksbank. So what should, and I know that the Swedish FSA has put a cap of 100 billion in total balance for banks, which should comply to the LCR requirement. But that still leaves some domestic banks with a problem. What should they invest in? If they don't have access to the ECB or the Fed, how should they meet their liquidity coverage ratio requirements?
I think, I don't think it's so much about access to the Fed or the ECB. What Swedish banks are doing today is kind of an arbitrage. because they borrow, it's kind of interest rate arbitrage. They are, for good reason, stronger than their competitors. So they borrow and then they place it as a deposit at the ECB or Fed. So what they are doing is that they are building the buffers at the ECB or Fed. So the smaller banks, maybe they can't do the same arbitrage. But again, the LCR is not about only having your liquidity reserves at the central bank. There are other high-quality assets that you could use, and which is also available to other institutions.
For example?
Government bonds, or there are some other high-level quality assets.
Well, it seems to me that there is a relative shortage of level 1 assets for Swedish banks if you don't want to assume too much currency risk.
Yeah, that's a global discussion. I think to date, there is a lot of discussions going on global fora. Today, I think it's too early to say whether or not there is actually a shortage of high-level quality assets.
So you have no input on the discussion on the Basel Committee of any changes to the LCR requirements?
There is a lot of discussions.
Okay, so maybe this takes us to the end of our information. Thanks for joining us and listening to our conclusions from the stability report. And
Thank you
very much.
Thank you.